Ladies and gentlemen, open banking pioneers, hello, and thank you for joining us. And as I can see from the registrations, we've many new pioneers from around the world tuning in. So a big warm welcome to you. So how are you all doing? We're in lockdown 3 in the UK and it has its challenges and we all need to look after each other. I call it a COVID cuddle. This is why we're collaborating with the FinTech Alliance on the Kickstart program to create opportunities for the young talent that needs a helping hand right now in this economic crisis. It's a privilege to give them the opportunity to work in FinTech. Now, we'd love as many of you to get involved and to give somebody a helping hand at a point in time when they need it. So please do join our cohort. As always, we'll be sharing much more around that on LinkedIn and Twitter. And talking of giving back, Eversheds Sutherland are starting a new series of free clinics, a lawyer giving away free time. Absolutely superb. Now, you've also got the opportunity to get to know Ruth on the panel today. Now, as you can see at the side of your screen on Slido, we're asking for the topics you want to talk about. You can either jot them in Slido or send them to the email that you can see at the top, hello@openbankingexcellence.org. Please do let us know. We want to listen, we want to hear. Also on your screen, you can see the super talented Karina graphically recording everything our panelists are about to share. Okay, so let me call this one out. Last week on LinkedIn, you might have seen a post of our Open Finance Appathon panel judging. And let me just say, they looked super thoughtful, and it's probably the most unflattering picture you're ever going to see of me. So this competition is all around empowering businesses to build using APIs. It's amazing. And I would like to say we're very, very grateful to everybody that found the time, particularly right now, to put the energy and the effort into their applications. That absolutely shone through. And I am now delighted to announce our 12 finalists. And I would like to thank everybody that you can see on screen for helping make this happen. And by the way, panel, this is a screenshot that we will be sharing. So now is your time to say cheese and to smile. Okay, so by way of a little lockdown fun, and as the warm-up act for the Mastercard report of the global state of pay that we will be promoting, and we'll be following on with another piece of film content from Jim on this report later on in the month, you can now see on screen the flags of all the countries that have contributed. Now, when I saw these flags, to be honest, I had to go onto Google. So we thought it would be a little bit of lockdown fun if you send the answers to the flags that the names of the countries rather of the flags, and the top 10 correct answers, we will actually send out a prize. So if you send it to hello@openbankingexcellence.org, the first 10 that we receive, we will send a prize to. Okay, so the global state of pay is our theme for today. We believe that open banking payments should be ubiquitous, and we're doing our bit. As you can see at the bottom of the screen, you can lift your phone and using open banking payment initiation, make a payment donation to one of our chosen charities. COVID has definitely helped accelerate the adoption of open banking payments. And it's something that I'm sure our panel even, getting tongue-tied, I'm sure that our panel will be commenting on. Our guest host is Fawn from Money 2020. So Fawn, that is a lovely segue for you to pick up the mic and to introduce our panel. Thank you, Fawn.
Wonderful. Well, welcome everyone. We're delighted you can join us today. I'm definitely hoping we can take a few viewer questions. So please do visit slido.com and use the OBE hashtag and submit your queries. We're in it for a fascinating conversation. So without further ado, I'd like to introduce you to your experts. So we'll start with Imran, who is the implementation trustee for the open banking implementation entity. We have Ruth with us. She is a payments and open banking specialist from Eversheds, Sutherland. We have Nick, founder of RTGS.global, and Nigel, co-founder and CEO of Railsbank, and Jim, Senior Vice President for Open Banking at Mastercard. So hello all, nice to see you. I'm going to dive right in so that we can get to the good stuff really quickly. Let's set the scene a bit. So payments landscape changing drastically over the last year in COVID, the dreaded C word that we cannot stop talking about. I'd like for each of you to give me one trend that's really exciting you at the moment. And Jim, I'm going to start with you because I know you've got some good stuff in that report.
Yeah, thanks, Fawn, and hi everybody. Thank you for joining. Yeah, we'll talk more about it, as Helen said, in a subsequent piece. But we towards the end of last year did a global study of what's going on what we called the state of pay. A big part of that was open banking. 14 markets around the world, and you've seen the flags, if not the countries that we did the research in. And the big thing for me was just another confirmation that the whole open banking and indeed therefore in many countries the whole open payment thing is just everywhere. If anything, we saw more appetite and more demand in quote unquote developing markets in terms of consumer ambition, desire, and just sheer want to get access to these sorts of services.
Wonderful. And Ruth, now I'm going to go over to you, please.
Oh, thanks, Fawn. For me, I think it has to be the impetus that COVID, the dreaded C word, has kind of given to the market. So there's been such a huge increase in digital banking and mobile payments, and that's just led to so many changes in the market. We've seen such a kind of increase in the number of partnerships, between different entities, whether it's incumbent providers and kind of smaller FinTechs or non-regulated providers partnering with regulated providers to provide really new, exciting products for customers.
I like this word partnerships. I think we're going to be hearing a lot about it. It's going to be a key theme in 2021 and beyond. Nigel, how about you?
Just firstly, thanks to the OBE for the organisation of this event. It's probably the best organised event I think I've attended over the past year. We believe in embedded finance. We're seeing the real trend in banking as a service platforms like ourselves at Railsbank, deconstructing financial products into their core individual components. And so like a bank account, send money, receive money, a card, a loan, and then enabling customers to reconstruct those into their customer experiences, whether you're a supermarket, whether you're an airport, whether you're FinTech and others. So we see this trend of being able to put the financial services and distribute them and put them around the customer, as opposed to the customer having to go to find financial services. And just one statistic that backs some of this sort of trend up. And most banking apps and financial services apps get about 0.1% of idle time on smartphones. And that's some statistic that Google threw up. I'm not sure if it's correct or not, but hey, Google is normally correct sometimes. And but if you go to all the other apps, the apps you work in every day and the brands you engage with, imagine if financial services delivered through those brands. So embedded finance we see as something that, and also open banking is one of those sort of deconstructed and reconstructed components that gives access to as well. So embedded finance we think is the trend for this year and further into next year.
Nick, how about you? What are you saying?
I think that everything we talk about is affected by the pandemic, but the one thing that the pandemic has done, which is an obtuse positive, is that everybody in the world has been forced to embrace all things digital, because we've been in lockdown, we've been at home, we've had to change our working habits, we've had to change how we communicate with our customers and our colleagues, and that's had a profound effect, because it's made people understand that there's an easier way or a different way of doing things, rather than accepting the way that they were perhaps traditionally thinking about developing things. And I think there's been a massive acceleration of innovation and projects that people were talking about implementing by 2030, which is a near date, have been left shifted probably to 2025. All the banks are scrabbling to get into the cloud because they realize that the way they operated before isn't efficient. Within my business, RTGS.global, what we've seen is a massive interest in atomic settlement. And atomic settlement means that you can move liquidity, real validated liquidity, around the world in microseconds, 24/7 by 365. And if you take the plan or the aspiration of open banking, it is open money, and it means that your money is open and accessible to you 24/7 by 365. And we don't have a world where if we log on to Google, it says it's closed. We do have that within financial services. And I think that the whole market is now going to take advantage, or those clever businesses will take advantage of the dreadful effects of the pandemic, but build out of that an infrastructure and an operating environment for customers way ahead of when we thought it would arrive.
Very good. Imran, last but not least, coming to you.
Hi, Fawn. Hi, everyone. Thanks so much for inviting me to this great event. Look, there's so many highlights that everyone has mentioned. I think they're fantastic. The one that I'd like to talk about very quickly is adoption, and adoption specifically within the open banking APIs here in the UK. For me, I think until quite recently, and arguably still today, open banking is the best kept secret in financial services. Once you get outside of the bubble of open banking excellence and so on, not a lot of people know about it. But the really exciting thing is we're beginning to see adoption. Just recently, or today rather, I should say that we've got more than 2.5 million active users of open banking enabled products. It's still a small number in the grand scheme of things, but boy, is it growing quickly. And it really does feel like this is just the start. So that number seems to be doubling, approximately every 6 months. That's what it did. That's difficult to tell with the pandemic, the impact of the pandemic. I know you like your stats in terms of API volumes. 70 million API calls were made in 2018. That's 5 billion in 2020. So it is increasing nicely. And on the payment side, I think this is really important. The final pieces of the jigsaw are coming into place. They're not there yet, but already we're seeing a good level of payments, 3.5 million in 2020, and hopefully soon we're going to be hitting 1 million a month. So again, you can feel the growth rates coming through. So that's the key highlight for me. There's lots of other things in the pipeline, but maybe we'll get to them later on.
Perfect. No, that's fascinating. And many of you talked about the consumer, which leads me to my next question. We're seeing big behavioral shifts in consumer behavior. So what are some of the stumbling blocks for customers when it comes to open banking payments? And more importantly, how do we tackle them? So you get one each. Jim, I'm coming back to you.
Okay. I don't think there are stumbling blocks. I think there's opportunities. I think what we see very clearly in terms of the services we enable, and for that matter, the research that I've already referenced, is it all comes down to trust. If a customer trusts the brand with which they're engaging, then we see it's a very easy journey to get people starting to use open banking for a range of services, including payments. So trust has many things associated with it, but things like transparency, things like putting things right quickly if there's a problem, they all shine through. If people trust the service they're using, they use it, and we see very quick adoption.
And Nick, I know that you had mentioned trust when we were chatting before. Do you have anything to expand on that?
Yeah, I think it's critical in all things financial. Last year we saw a very large firm go over, causing massive disruption to people in relation to how they were able to get access to their money. And frankly, from where I sit, that things like that are unforgivable now. We seem to lurch from one financial crisis to another, and we don't seem to learn the lessons that from the last one. in relation to regulation and oversight and all the rest of it. The problem that we have is that, open banking, the marketplace is really driven by the entrepreneurs in it, who tend to be smaller companies. So, negative impacts from firms going over and causing inconvenience actually slows the whole market adoption down. So I think as an industry, as an open banking industry, we need to, potentially self-govern and have our own, code of excellence, perhaps over and above that the regulators are applying. And if we do that, I think then we start to achieve greater consumer adoption, almost going back to the old BSI. Nigel will remember this, the old kite mark that we used to have on goods and standards in relation to things being validated. The word that's used at the moment isn't a mark, it's just the word bank. And I think that's the issue. There's still trust with the banks, all the research shows that. But there's also a lot of smaller businesses who have the same level of trust, but we've just got to elevate that so that people can try out the technology and the experiences and the customer service experiences, which you get from new tech, which you don't get from old bank.
All gone very quiet. Yeah, I mean, Nick, I agree. I mean, people trust their banks because of the years of experience. They may not necessarily love their banks, but they trust them. It's how do you expand that trust into a broader range of organisations? And we absolutely see brands that people recognise starting to provide services and customers engaging with those. But absolutely, how do you get those newer businesses? How do you help them get up that trust curve, I guess?
Sorry, guys, that was my mute button. That wasn't functioning properly. Ruth, I was turning to you next.
Sure, thanks, Fawn. I think one side of it for me when you look at consumer protection, which is really interesting, is looking at friction. I think mostly in the open banking space, we talk about friction and how great it is removing friction. And removing friction from both payments journeys and from things like onboarding journeys. I think there's a kind of question or a slight, perhaps stumbling block around where the line is drawn in terms of that removal of friction, and whether there is an element of positive friction that should be built into things. And I guess I look at that slightly, on one side from a payments perspective. So, we're moving into a slightly ethical space here, but, should making a payment be as easy as it possibly can be, or should we be kind of sort of giving people a moment to pause and think about their financial decisions? And also from, if you look at the account information side of open banking, we've just, heard Jim and Nick talk about trust and how important trust is. And, when you look at some of the services and things that are out there, you've got to think a lot about the data that goes into them for them to operate really well and build up a profile and things like that to get maybe a full picture of your financial, your financial state. So, is there enough friction so that people truly understand what they're signing up to? And what the limitations of a service are and things like that, so they know where their data's going. And, in terms of how we can tackle it, for me, that's really an education piece, both a broader market education piece, but, making sure, to Nick's point about a kind of centre of excellence above, what the regulators suggest, making sure that, all the entities out there are really making it very clear, and making sure there's enough pause for thought in a journey, for example, to really truly understand and make sure a customer understands what they're signing up to.
That idea of financial literacy coming back, I think is an interesting question though. Should we be making payments as easy as they possibly can be? Kind of controversial. I'd be interested, not to segue us too far off, but to hear the rest of the panel's opinion on that, if anyone wants to jump into that debate. Am I going to have any takers? Everyone's like, no, Fawn, don't want to go there.
Fawn, you definitely do, because it calls into question so many different things that our industry is good at and then doesn't collaborate on. And you can have positive identification. You can use AI. There's tons of technologies and systems that you can use to make people's authorization of a payment simple. Highly simple. Jim knows all about this, but we're not using it. And there's no utility or ubiquity in relation to how that's going to be deployed within the industry. And therefore, what you do is you just pass the friction back to the customers and then say, well, actually, when it goes wrong, it's your fault as a customer, and which is a bit like, how do you say it nicely, passing the buck. No pun intended.
Jim, do you want to weigh in on that? Or, oh, Nigel's come off mute, and so is Imran. Okay, we've started something.
Go on, Nigel.
No, I was just coming off mute and just in general.
Okay. Look, I mean, I think it's a very interesting balance between making payments as easy as possible, and the industry's been working on that for a very long time, versus that kind of opportunity for pause for thought, or as I think you articulated it. Now, I think we've largely got the balance right on that with things like open banking enabled payments. I think in the UK, things like the app-to-app journey that's enabled, strikes a really great balance between usability. But you still have to, even if you're on your mobile phone or whatever, just authorizing with your thumb, but you still have to think about it, and there is that moment of truth. Nick's right. There's all sorts of stuff that happens, increasingly now in the most sophisticated payment journeys. Stuff in the background to make sure that it really is you. For example, it is really you using your device, not just that the device recognizes the thumbprint. But I think there's always going to be more that can be done. I think it would be kind of controversial and an interesting debate to say let's make it harder for people to spend their own money, because ultimately it is their own money. But that's why things like the card industry over the years has put lots of time and energy into putting in customer protection, such that if things do go wrong, the customer is protected. And I do think that's something that we can absolutely think more about in other forms of payment. And indeed, as we've talked about before at this forum and others, it's something Mastercard is certainly looking at, and we're doing quite a lot of work on thinking about the sorts of things Nick was talking about in terms of how do you create that kind of almost overarching framework to help further build trust and so on, particularly when you start thinking beyond just any one country, because ultimately we absolutely see that the kind of open banking and its derivatives will become a global thing rather than what we have today, which is a lot of great initiatives that tend to be national level.
Imran, Nigel, we're going to jump in there.
Yeah, I guess the reason I didn't jump in earlier is that we've gone right in at the deep end here, haven't we, right?
Wow, that's my job, guys. Come on.
This is really complex stuff, and I think it's so important that we don't just try and, in some sort of Trumpian manner, have a left and a right, and this is really, really kind of nuanced, this stuff. I think our experience of designing standards which the banks have to implement, back at Open Banking HQ, if you like, is that this notion that there is such a thing as positive friction, negative friction, you've got to be really, really careful with. What we find is that if you allow space for friction to be incorporated, then bad journeys, bad user experiences are what fills the vacuum. And in some regards, you might argue there's competitive reasons as to why that might happen, with individual institutions protecting their corporate environment, or their commercial space, I should probably better say. But with reality, what we found is that it doesn't mean that the consumer is better served. So by putting an extra screen in, it doesn't cause the consumer to stop, pause, and think, do I really want to buy that thing that I'm is nice and spangly or jangly or whatever, and I shouldn't buy it. It's not what happens. They just fly through it because it becomes habit forming very, very quickly. And I think the LSB has done quite a lot of good work, and indeed is kind of, with support from the OBIE, actually, is updating and refreshing a lot of its guidance as to what makes for good customer journeys, what makes for effective warnings? And one of the things that makes for an effective warning is it ought to be a risk-based warning. And I don't think we're really doing anything like that at the moment. At the moment, it's very clumsy. As Nick says, there's a bunch of stuff that we're not using that we should be using, and the stuff that we are using is incredibly clumsy. So I think it's the onus is on us as an industry to try and kind of work our way through and figure out what does actually benefit a customer and what doesn't. And I'm party some really interesting conversations with the PSR where we're beginning to break that down so we can put in the kind of the pause for thought really where it matters in the journey and for the right transactions, for the right customer at the right point in time. It's tough, but we'll get there. The other thing I just love to say as well, whilst I got the floor, is that this idea of a kind of code of excellence for the vast array of fintechs out there who are the pioneers and moving the industry forward, I've always thought that that would be a good idea. I've always thought that accompanied with that, you could have some kind of trust mark, which would be a mark of trust. And but nonetheless, what I have found is that rather frustratingly, about a year and a bit ago, when we tried to bring the industry around together and say, let's develop one of these things, it was rejected. And it wasn't rejected just by the fintechs or by the banks, it was rejected kind of like wholly. And it's interesting because under PSD2, whilst there's a lot that we can do to mandate the banks do things, there's nothing really we can do to mandate the third parties to do things. Of course, they have to be authorized by the FCA, but there's nothing there where you can encourage or coerce them to join one of these things. It could even be construed to be an obstacle. So one of the questions I'd have for anyone really is, I feel it's a good idea, but how do we get them there?
That's a very good question. And I'm gonna keep going with this because this is great. So if anyone wants to weigh in on that, please feel free. Nigel, you've been quiet over there, so maybe it's your turn.
Yeah, there's some observations. Customer journeys tend to be blocked by compliance, anti-fraud, and a ton of other things, which if you look at the type of people you get in the majority of financial institutions, aren't the most digitally minded people. And so ergo, all the tools and everything that's out there, we don't trust the tools, we only trust ourselves, and things, which is a bit of a false sense of security. It's like saying we won't go onto Amazon AWS because we have better security than AWS. AWS gets trying to be broken into probably 1 million times a second, and so they actually know how to do security probably better than anybody else in the world, in the commercial world anyway. So I think there's always an observation rather than thinking, so that's based really on fact, that there's the people who put the blockers in, or the parts of the organizations that put the blockers in, with a good intent of doing the right thing, but I think the mindset is very insular and internal. And the observation we're seeing in fraud across faster payments and everything, which is a colossal issue, is people trying to work together. It is very difficult because the processes, the infrastructure, there's no standards, there's no excellence, and if you don't have the thing bank in your name, you're considered not competent to do something. I think that needs to go away. So I mirror Imran's approach. If you can get people to subscribe to something of excellence, the process standards, approach, sharing of information, we get to a better world in terms of protecting the consumer. Because a lot of the fraud isn't just on the identity piece, it's on the social manipulation piece, where somebody on Facebook hacks your friend's account, and then your friend says to you, hey, can I borrow 100 quid for the weekend? You say, yeah, sure. You send it to them, and it's actually sent to a fraudster. And no bank can protect against that. I think the whole the gaffer companies need to really look at how can they be anti-fraud too. So they need to be brought into the tent as well, because it's the end-to-end, say, fraud journey goes from, say, Facebook, from Twitter, from others, all the way through to the Bitcoin, say some of the Bitcoin exchanges where the money's layered and disappeared, and it goes through some of the fintechs as well. Another observation is, and I think there was a talk 2 years ago by the head of compliance of Deutsche Bank, I think it is at the time. He made a wonderful statement in public in a conference saying, any of us who don't believe we're processing the proceeds of crime shouldn't be in our business because it happens all the time. Everybody does it. And the observation is a lot of the high street banks, it's not just high street, it's banks in the world in general, and G10 banks in general, take a sort of a holier than thou attitude when they're not holier than thou. One of the main UK retail banks is the biggest bank of arms dealers in the world. Another one is a major bank of the diamond industry and stuff, but criticizes others who go into that industry. So protectionism. So there's a ton of protectionism not invented here, and there's other organisations like Gimlet, which you get MI5 and 6 and others contributing in the bank. So it's a fairly closed club, and trying to get people into that who also process tons of payments, get Revolut into it, get ourselves into it, get others. You're able then to protect consumer because it's that sharing and we're all in the same boat here rather than this holier than thou attitude. So I think some of those attitudes, and that's quite I like with Imran's frustration. I just mirror it too, but it's something we need to change in industry and pioneer and probably take the lead on, because there's a lot of people sitting happy and safe behind their sort of walled gardens, rather than getting out there and actually solving, addressing the real problems, especially in, say, in fraud. In the cards world have done a great advances in that over the past X number of years. And I think, say, faster payments is relatively new, and it's not just faster payments, it's fast in Singapore and all the other SEPA instant and everything. It's got instant payments. We've got to learn to address and manage it, because it does end up, and there's a court case just went through the past couple of days, where it's ruled against the individual because the bank isn't culpable. Well, the bank isn't culpable. It isn't. I hate to say it, the consumer was conned, and we can't undermine conning, if you see what I mean. You can undermine chargebacks when goods don't arrive and everything, but we can't underwrite as a society somebody being conned. But we can try and put the measures in place that can help recover funds, can help protect against and make it more difficult for when funds are solicited by somebody being conned, to make it a better place. But we need to work together to it, rather than just sit thinking holier than thou type attitudes and engaging.
Good message for the industry. I think that needs to be heard loud and clear for sure. I've got some questions coming in on Slido, so I wanted to get to those. Our first one, I'm going to go to Sam. He's saying, following departure of the UK from the EU, what are the potential or wish list of divergence from PSD2 regulations that would expedite the UK payment sector? Who wants to take that one?
Yep, I can have a go.
Go for it, Imran.
90-day reauthorization. So if you use open banking, particularly with data at the moment, to make a connection between a third party and your bank, every 90 days you have to re-authenticate, so which means that you have to reapprove that connection. And the issue is that many propositions out there at the moment are longer than 90 days. They might be things that work in the background, or things that tell you in a year's time when something's happened. They help you with budgeting. They help small businesses with cloud accounting packages. And what they're all finding is that when you hit the 90th day, then all these services turn off, and it's quite difficult to go around and turn them all back on again. So that was something that was, I think, the product of a negotiation in Brussels probably about 7 years ago. It's way too outmoded, and it needs reviewing. And I'm pleased to say the FCA are alive to it. They realise there's an issue there, and they will be looking at it. But because PSD2 is a maximum harmonisation directive, in the old world we weren't able to change it. In the new world, I think we can take a fresh look at it.
Perfect. We've got another one here from Dan. Or Ruth, were you going to jump in on that one?
I was just going to add, I think, there's been a real push over the last few years from, every institution really that works with their customers, trying to simplify, the documentation that goes out to their customers, the communications that go out to their customers. But I think there's a real friction between what the payment services regulations require, which is, a whole host of information to be sat within, a set of terms and conditions or something, some kind of communication, which prevents, I think, a lot of people going as far as they maybe would in terms of redesigning and coming up with a really innovative way to communicate with customers. So, from the perspective of the clients I work with and from myself, I think that would be a wish list ask, to allow them to do what they want to do on that front.
Anyone else want to weigh in on that one? Okay, we'll go to the next one, which is from Dan. Dan's got two here, and I'm only going to take one because I think we touched on the other one, Dan. So he says, with China and Sweden now nearly cashless, who will say physical money as a payment method?
It's interesting. On China was gone cashless because essentially there was no digital payment system like cards acquiring networks existing in Japan, not Japan and China. Because remember, what the purpose of banks in China were for originally was to basically distribute party funds. There wasn't really a retail banking type capability in China. And it's interesting. I sat in China on a panel discussing this with one of the heads of one of the banks, and the appointment was a political appointment rather than a banking experience appointment as well. And so there was no infrastructure, and so it was super easy for the tech companies to go in and build super fast, as in deployment fast, modern, frictionless payment mechanisms with WeChat Pay, Alipay, and all those others. And as adopted super fast, something that Visa and Mastercard pioneered in the 1950s or so. So, but it's now still got legacy infrastructure on the back of that. So will cash go away? It's really if there's two arguments to this. Is cash, whatever how many basis points you pay on cash to go and accept it and place it into your bank is number one. If it's going to be, if it's the price on that, and then there's acquiring costs because they see so many, especially small shops and corner shops that say I don't accept anything below £15 or £5 or anything like that because of the acquiring relationship they have to have with their bank. And so I think there's the economics of acquiring need to change significantly, number one. Number two, there's a social thing, is a lot of people like cash, like to be paid in cash, like to be out of the system. I think the where it's going to change is when we start going towards a digital sterling or digital dollar or digital euro issued by central banks. And so we are able to then have a totally frictionless, it's almost like open banking payment initiation on steroids, if you see what I mean. That's a time when the costs can be totally drawn out of it and everybody knows where their money is. But cash will always be there because of a thing called a tax system. If you look in France, every restaurant, 60% of the revenues is declared, 40% isn't, and things. So and if you're able to harmonise the tax system to incentivise not using cash, that is probably where you're going to get massive social change.
Yeah, and people like the anonymity of cash for a variety of reasons. I think back to the C word, though, what we've seen around the world is just a very substantial move from cash to contactless, and initiatives like increasing the contactless threshold limit and so on. As it's another thing we've seen through the last year, alongside kind of greater adoption of digital. We've seen greater adoption of contactless. I suspect we'll see that change persists. I think cash will still have a role to play for a long time to come in many economies, though, because of that anonymity piece, and people like that component. It'll be interesting to see what happens with fiat digital currencies over time, how that does play out. But I think it's got a fair way to go.
Yeah, I think it's interesting. The other week I was in town, and before I'd gone into town, I just checked in my wallet, as you do, and I hadn't got a lot of cash, and I went to the ATM to get some cash, and then as I was walking away, I got a phone call from my wife, and she said, "What are you doing?" I said, "I've just got some cash." And she said, "Well, where are you going to spend it?" And it was one of those ooh-ha moments, you've completely messed up. And interestingly, the government, I live over in Jersey in the Channel Islands, the government issued everybody here a prepaid Mastercard with 100 quid on, irrespective of your age, as an inducement to sort of put some cash into the economy to get everybody spending, which again has pushed the digital use, the contactless use, and Jim will be delighted because it was a Mastercard, right the way down into the young children getting access to these things. I think the point Nigel made is really interesting in relation to the scheme's friction in relation to settlement delays. And they don't need to exist. With atomic settlement, you can pay a shopkeeper of a contactless or digital payment, credit card payment, bank payment, or whatever, before you leave the store. You don't have to have this delay. It doesn't impact on the margins and the revenue case of the card schemes. All it does is deliver a massive service, which is parallel to cash usage to the retailer. And I think once things like that start to happen, retailers will reject cash because it's a cost for them to cover. But I think, again, the longer we stay in lockdown, the longer we have the uncertainty of this pandemic, the greater the erosion to cash use. And you'll find a lot of people will, I think, very reluctantly go back to it because they've forgotten how to use it.
That kind of leads us to a similar question from Jackie. She asks, what needs to happen to accelerate consumer adoption of open banking for online purchases, given that there are consumer advantages of using credit cards?
Shall I have a crack at that one? And
Yeah.
I was just going to make one quick comment about the cash, because whilst I completely agree with what everyone said, and it almost feels inevitable that cash is gone. Even people, who I'd have thought took cash in the past, they all want bank transfers now. It's amazing. But I'll tell you one thing that was really odd is I've got a euro account, and I now have to pay interest to the bank for holding my euros. So negative interest rates do mess things up quite a bit, and that's a weird feeling. I don't know if that means that maybe I should be keeping my cash under the bed. Don't know. With regard to merchants and using open banking in e-commerce environments, it's a very obvious use case. A lot of the merchants are interested in taking payments directly from via bank accounts, because often there's no settlement period, there's no interchange fees to pay. So there's a lot of benefits to them there. What we found, however, is over the course of last year, is that there was a really crucial piece of missing functionality, and it was kind of obvious, and that's refunds. So it's very hard to reverse a payment made over bank transfer, particularly using the old open banking model. But I'm very pleased to say that after a lengthy consultation over the course of last year, we did formally approve refund functionality into the open banking standards, and that's going to be rolled out over the course of the next weeks and months. So really interested to see if that makes a difference and brings more merchants to the table, because they are interested, but they need refunds to work.
We're certainly seeing a lot of interest and demand from a bunch of different merchant categories. Public domain, working with one of the large credit card issuers in the UK, namely Tesco Bank, and they've added open banking payment initiation as a way for their customers to repay their credit card. And that's an example of a use case where the refund thing doesn't matter. Same with, we have some wallet top-up type customers and things like that, where again, it doesn't matter quite so much. But equally, we see absolutely increasing interest and uptake from various forms of e-com merchants. They want to add another payment functionality, another payment option for their customers, because clearly if the customer wants to pay that way, the merchant wants to be able to support that. Yeah, there are some differences in settlement speed. There are some differences in economics, but actually a lot of the time it's UX. really good digital experiences. In the end, if the authentication method is, put your thumb on your screen through an app-to-app journey, particularly in the mobile channel, that can be very powerful. I think the refund functionality will certainly help and remove a concern. Back to the trust thing from a customer perspective we were talking about earlier, and it's great to hear the progress that Imran and his team have been making. But yeah, look, we see a lot. Probably most of the conversations we're having now are about payment initiation use cases of varying flavors with a bunch of different customers.
A couple of observations. If you can see it from the shoes of the merchant, because it's cheaper, there is an interchange. But the person who actually does the payment is the consumer, and the consumer using Visa, Mastercard, or Amex, any of them, has this embedded thing when they use their cards called protections. And that's one of the main reasons why people pay in the interchange, etc., is because there's an underlying insurance in the payment. For example, if some damaged goods don't arrive and everything else like that, of which there's no recourse under the payment initiation. So while I think that technically and economic for the merchant, it's a great thing, for the consumer, I think there needs to be almost like an industry or throw that to the insurance companies, that you can buy the equivalent of the coverage you get on the card schemes for your payment initiations, or the banks or the industry comes together to give that sort of scheme coverage. That's one of the main reasons why there is the Visa, Mastercard are still used. They protect the consumer, and the consumer pays the merchant, and ergo, if the money's coming in from the consumer who buys the goods, that's who's going to drive it. And I think we've got to, refunds are great, that's great, that's a functionality thing, but it's the underlying protections you get from using cards. Now, you don't actually need to use a card to have protection, if you see what I mean. So if you have the schemes sitting on top of payment initiation, which I guess Mastercard and Visa from recent acquisitions and attempted acquisitions were looking to do, that you put those things together, and I think you've got quite a happy space. And I'd throw it out there to all of you involved in the real open banking stuff. We're on the sidelines of banking as a service, to see, can you put some consumer protections around it, and that would be and it comes back to faster payments as well, consumer protections. Now I'm sure there's definitely a business to be had as well from a commercial perspective to do that too, because insurance is a great thing to go into.
Nigel, it's funny you mentioned that, because back in 2000, when we were getting WorldPay going, we invented the Internet Payments Guarantee to protect consumers against transactions going, sour, to say the least. And we surcharged the merchants for providing that service, and it ended up we paid out very little. There wasn't a ton of fraud back then. But it provided a confidence level to consumers to actually trust a payments route.
And so, just one other quick comment, going back to the cashless thing, one observation, sorry, my mute was on, was in Japan, which has traditionally been cashless, over COVID, it's been driven uncashless due to hygiene and fear of virus reasons. So in some way, there's a positive outcome from COVID, that Japan is now massively embracing sort of like contactless and cashless-based payments.
Yeah, that's right. I mean, just going back to what you said, Nigel, about why are schemes like Mastercard widely used? I think a big part of it is acceptance. We all carry something in our pocket which works. But yeah, and that's one of the reasons. Going back to an earlier comment. We're looking at how does one over time build interoperability and so on across countries for open banking type payments. But I agree with the comments made about how do you build trust? It's by reassuring customers that if things go wrong, they'll be looked after and things will be put right very quickly, and that's an important part of the mix. But different use cases have different dynamics, and going back to what I said about things like prepaid top-up type use cases. Those concerns don't exist, and we see customers, enthusiastically embracing use of open banking payments for those sorts of methods, because it's just net better than the alternatives. But our business, in the end of the day, if a customer and a merchant, or whatever combination of payer and payee want to use a particular payment method, then we're there to support it. And ultimately, that's why Mastercard did things like buying Vocalink in the first place.
I think this point around the fact that there are actually lots of instances where you don't need protection, whether it's because as you say, it's a wallet top up, or making a donation to a charity, or buying a meal at a restaurant. Do you remember we used to do that not so long ago? These are things that you pay for after you've had the experience. And I think what we're really keen to do, if I wear my government hat rather than my kind of trustee hat, is make sure that what we don't do is simply replicate the blanket protection that you get in cards, but ideally, and this is to Nick and Nigel's point, I think, create an environment where innovative new services can be created to create insurance around things that really matter. And you see it in the kind of elements of the travel industry. And wouldn't it be great if there was something similar for wedding deposits? Apparently that's a big thing, and they often fall through. But you don't need it in other areas, and you don't need it when you're buying a coffee in Pret, for example. So if we can create that environment, that would be a wonderful thing. What we're not about to do is dash headlong and say protections have to be overlaid over everything.
No, agreed. That you're able to actually have a much more accurate and appropriate protections, because all merchants, depending on the code, all bear the cost of essentially the scheme insurances, and so you can make it highly applicable to merchants where there's pretty much near zero risk, and because you've got a much more effective method. What the challenge is again, in use the Pret example, is what we need to think through as an industry is the acquiring network, and as a society, the acquiring networks. China built the network super quick by using internet technologies and everything, and not needing the terminal. They just needed a simple thing called a QR code, and that made it so frictionless and easy for the merchant to accept. If we did the same thing with almost QR code based acceptance and Pret, using open banking to do the payment, bingo, we've got a very different, and there'll be pushback from Visa and Mastercard on that because that's sort of bypassing the network, but it's using a different network. It's called open banking and UK faster payments, and you can then get the merchant settlement down from 2-3 days. It's like 3 days in some parts of the world. And you get instant merchant settlements, and that gets 3 days of cash flow financing from the CFO. And especially something like Pret, the amount of cash, the amount of float, also 3 days coverage they have to have when they're acquiring. Open banking could, payment initiation and a different network could massively change. That's what they do in China, basically.
Okay, so I'm going to cut in here because I'm aware that we've got about 3 minutes left, and then we're going to have to wrap up because there's going to be children barging into rooms on screen very shortly. So I have one final question, and it's kind of rapid fire. What does 2021 hold for open banking payments? The good, the bad, the ugly? Ruth, I'm going to you first.
I'm going to say SME banking. I think open banking's been, up to now quite consumer focused. We've seen lots of really exciting consumer products. I think over 2021, we're going to see a lot more products based at businesses, which could revolutionize the way they operate.
Wonderful. Nick, you're next.
Just 4 words, customer service and efficiency. Those businesses that get into that are going to win, because everybody's got used to that, being stuck at home.
Yes, good. Nigel?
I think this is the year of the precursor of digital currencies, and I don't just mean Bitcoin, and digital assets being able to be spent. The regulations now coming up to what it needs to be. Central banks are getting super interested and capable, so this is the precursor year to probably the rest of the 20s to digital currencies backed by a proper central bank. Will come prevalent. This year's the real sort of kickoff of it, especially from a regulatory side.
Interesting. Imran?
A bit closer to home, where are we going to get to with our consultations on variable recurring payments and sweeping? And these are open banking bits of functionality that frankly kind of like would supercharge the open banking payments piece. So two very interesting and exciting products, and we'll see where we get to.
And Jim, last but not least.
I think it's already supercharging, looking at the numbers we see going through specifically on payments. It's, going through us kind of doubling month over month. The payment stuff is really starting to motor, and I think we're really going to see that become much more mainstream in 2020, not just in the UK, but a number of other countries as well.
Wonderful. I think some of the key things that have kind of stuck out for me today is this idea around code of excellence and standardization, which really is going to needs the industry to do better and become less insular. And of course, that leads to partnerships, which are going to be crucial. And financial literacy is more important than ever. So thank you all for your insight. It's been a pleasure. And now I'm going to hand over to Helen, who's going to wrap us up.
Thank you, Fawn, and thank you, everybody. That session was very different from the one that we had planned and structured, which is absolutely awesome. Thank you. And led by the questions from our community. So brilliant. Thank you. Jim, you'll be pleased to know I've been asked that we show a sneaky peek of the flags again. So Martin, if you could put those on screen for everybody to see. We have already had a load of correct answers coming through. So you wanted to see them again, here they are. Okay, Ruth, I just want to say a big thank you for joining our panel. And I am very conscious you didn't get to say a lot, so I am going to give your clinics that Eversheds are doing another quick plug. So if you want to go to Slido and share the topics that you want to talk about, please do so. It's a lookout for more of what we're doing around that on all our social channels. Now, it is my absolute delight and pleasure to announce the winners of our Open Finance Appathon. Some brilliant entries that you saw at the top of the show. Thank you very much. And, I was incredibly touched, as were the other panel judges, by the amount of effort that everybody had gone to. So thank you for walking that extra mile. So the winners are Hasty for Open Finance for Good category, and you should be able to see these on screen. Boss Insights for the Retail and SME category. And finally, Tokyo is the winner for the corporate category. So all worthy winners. Thank you very, very much for everybody that contributed and helped to make that happen. And as always, we'll be sharing a lot more on social. All that remains for me to say, so we finish on time, is thank you for tuning in. And thank you for the panel for being so generous. We will be sharing this content again for view on demand. And what we're seeing is that we get a huge UK audience, American audience, and audience in Brazil. And then the viewing on demand, again, is UK catch up and a lot out in Asia Pac. So, and we will be doing edited highlights as well. So I'd also like to say again, a thank you for the panel and for generously giving their time and insights. And I'd like to say a big thank you for my team for absolutely everything they do. And I am going to ask the panel just to stay on so they can see Karina's artwork, which they can't currently see, though everybody at home can see it. So all that remains for me to say is thank you very much. Take good care of yourselves, look after each other, and bye for now.